Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from West Vault Mining. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in scheduling a meeting with West Vault Mining, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Sandy McVeigh, CEO and COO of West Vault Mining, Inc., which trades on the OTCQX Best Market under the symbol WVMDF and on the TSXV under the symbol WVM. Welcome, Sandy.
Hey, thanks, Bob. It's great to be back. It's a wonderful opportunity here. Sorry that we're not face-to-face, but this is the new reality. We Zoom all the time. I'm going to be going through this morning, taking a few minutes of everyone's time to talk about our single project, which is the Hasbrook project. We here at West Vault Mining have been moving this project forward since its acquisition in 2014 and believe we have a very interesting, not exactly unique story, but definitely a different one. So I would like, first of all, to get the cautionary statements out the way. Please note that everything I say today is supported by prior publications, and don't rely on anything that I say is basically what it says here. Moving on to what we're going to be talking about. I'm going to be talking about four broad topics. The fourth one is the project. Now, I'm not going to spend a whole heck of a lot of time talking about that because it's a good project. It's very simple. It's in Nevada. It's a good project. What I do want to talk about is our strategy, which is maybe a little bit different. I'm then going to talk about the value proposition and then who we are and why an investor might take comfort from the team, the strategy, and the proposition. So first of all, the proposition. You'll see by the logo that we've got here, the image. This is a vault. There's the gold. It's already there. This is not an exploration company. We're not speculative. We actually know what we've got. It's in the vault. It's still in the ground, but that's what we call the vault. So here's the strategy. So you can see this development going from left to right. You got the gold in the ground. You're going to go and mine it and process it and put a lot of money into that. It takes risk, time, and one day you're going to get a whole bunch of gold out of the ground if all things go right, and you're going to put it back in the ground in the form of a bank vault. Our part of that piece from early prospecting to exploration to development to constructing and operating a mine and then to closure, we take that piece where we say we have got something that is very well proven, it's there, we know what it is, and we're probably not going to be doing that mining thing. And I'm going to come to that. A couple of years ago, our company ownership changed when my good friend, colleague, Peter Palmetto, he's our chairman, he's the president of Sun Valley Gold, a very large gold fund, decided they liked the Hasbrook project and proceeded to acquire in the market shares, which brought them up to a 46% position in the company today. Here's his statement, and if you take nothing else away from this morning's presentation, this is probably the big message. So his view, his philosophy, why he bought West Vault Mining. We believe we are entering a secular period of rising gold prices. He has very good reason to believe that. He's been in this business for a long time, very successful. At the right point in the cycle, we believe WVM will go from being undervalued to fully valued. And I'll come to why we believe it's undervalued at the moment. We plan to build or sell Hasbrook only when fully valued. This will maximize shareholder returns. The emphasis is on shareholder returns. We don't want to do this just because we've got a development project that we'd like to go and build a mine because that's what we do. Our focus is on shareholder returns. And Peter Palmetto at 46% ownership position is in the driving seat and can say exactly what's going to happen, and it's not going to vary from that. Safe hands. So his view, holding Hasbro gold in the ground makes sense. It is more leveraged and less expensive than owning gold bullion or a gold ETF. It's a smart, low-risk strategy. So that's why we call it the gold vault. A couple of other commentators, Rick Rule, early investor, current investor in WVM. I put it to him a short while ago. Rick, what do you think of our strategy of just waiting for the gold cycle to do the heavy lifting for us here and increase value that way? His view was, he said, I do like the strategy. It'll take time, but limiting dilution around a proven deposit is a good strategy. One needs to be tolerant of boredom, but I am if the alternative is terror. Anyone who's been following the news on various projects where the owners have taken them from late development through to try to bring them into production, that's the terror that he's talking about when that just doesn't work out like it was supposed to. Tom Kaplan, he's not an investor, wish he was, multi-billionaire, made all his money in gold mining. People think production is how you make money, is what he says. It is not. It is selling something at a high price, effectively buying low, selling high, waiting for the gold cycle to do the heavy lifting. So this is somewhat unique in the junior gold space, what we're doing. We're not drilling. We're not going to say we're going to make it massive through the drill bit. We've got what we've got. Here's the value proposition. So there are a few credibility statements that I'd like to throw in here so you don't just have to take my word for it. Capstone Partners, their view of projects like this is fully permitted in a very good jurisdiction of a good, solid, robust economic project. Simple project should be about 0.45 times NPV, PNAV. When you get to first pour of gold and you go through that terror that Rick Rule was talking about, and you make that transition safely and you do it, you can be at 1 times PNAV. We're at 0.16. So maybe according to Capstone Partners, Joel Schneier, we're maybe a third of where we might be. Re-rating potential pegged, benchmarked against a recent sale just 17 miles south of us in February of this year. Centerra paid $206 million US for 483 saleable gold ounces in the Gemfield property. They bought it from Waterton. That equates to $427 US per saleable ounce. Our market cap today for our 577,000 saleable ounces is 74. So there's a factor of 6. And thirdly, I'd like to just point out that Sprott Royalty, Sprott Streaming, paid $6 million to us, hard cash, just a year ago, earlier this year, for a stream on the property, which, if you do the calculation, that equates to their valuation of our property at about $900 plus US dollars per recoverable ounce. And again, we're at about 74. So there's well over a 10 times delta there, in their opinion, of where we are versus where we might be. The fourth thing is gold price is going to help us, helps everybody, but we're highly leveraged. We have a good solid project, which at $1,275 gold, which is the last study that we did, gives you a 43% IRR. If the gold price goes up to $1,500, we're at 65. This is indicating that this is a robust economic project, not marginal. Value proposition number 5. Here I am in my office in the executive suite. You can see the background. It's not exactly luxurious. I'm the sole employee. We've shrunk the team down now that we've advanced the project to construction readiness. We run lean and mean. We have money in the kitty from the sale of the stream to Sprott Royalty, 5.5 million US cash at about 60 days ago. We have a very low burn rate, and we have cash for approximately 5 years. Team, who operates and who owns? As I say, I'm the CEO and COO. My colleague Frank Hallam on the right-hand side, victor of many previous adventures, including Platinum Group Metals, where he's CEO, West Timmins Mining, Mag Silver. He started all these companies along with my predecessor, Mike Jones. We have Peter Palmetto on the left-hand side, president of the Sun Valley Gold, and our chairman, Pierre Lebel, chairman of the Imperial Metals. Brain freeze there for a second. I apologize. Stephen Quinn. Very strong team, small team. So who else owns us? Here's the breakdown. 76% institutional ownership. That is good credibility. Institutions don't take these positions without doing that homework. Sun Valley Gold, as I said, at 46%. Ruffer out of UK at 17%. Eric Sprott at 5%. Conway AG, also known as Gold 2000, at 4%, and some others. So that's the first three parts. Those are the key things that I believe an investor, and I am personally an investor in this company, my own money. I haven't been gifted shares. I buy shares when I've got a bit of cash. The project is what I should talk about for a little bit here. Let's go and talk about this. This is the one pager that if you just don't want to go any deeper, here are the basic stats. So it's in Nevada. It's a great jurisdiction. It's an out for mining state. It's right next to Tonopah, which is a place which very much wants mining to occur. Our status is we have all key permits. This thing is construction ready. We have many parts of the project which are issued for construction drawings. We have up-to-date quotes for supplies of all the key components. So it literally, not figuratively, literally could be commenced tomorrow with an approximate 12-month timeline to first pour of gold, something in that region. It is very simple. The IRR at $1,500 gold, as I said, 65%. MPV 5, these are after-tax numbers, 200 million compared to our market cap. That's US. Our market cap today is about 40 million US, somewhere in that region. The initial capex is low, and this really enhances the economic robustness of the property. We can get in for somewhere in the region of 50 million and start producing. All-in sustaining costs are low at around about $700 per ounce. Gold at 8, knocking on the door of $1,800 today. There's a good safety margin there. Overall recoverable gold just short of 600,000 ounces over 8 years, 71,000 per year. The geology is solid, over 600 boreholes. It's all oxide. It's well understood. Metallurgy, we've had over 13 test programs indicating a 76% recovery from heap leach. Mining, low strip ratio of 1.1, and it's all above the water table. So that's the cheat sheet on the project. I'm going to go through some other slides here and just describe it in a little bit more detail. There's a map of Nevada showing where we are, down on the south of Nevada, bordering California, halfway between Reno and Vegas. We all know that Nevada is probably the number one jurisdiction in the world for gold mining and investing in gold mining. This is our land package. You'll see in the north, there's Tonopah, a historic mining town, and we've got about 12,000 acres. There is definitely expansion potential here. The little star in the middle we picked up a couple of years ago, Hill of Gold, upside property opportunity. It has a historic resource of maybe 20 to 25,000 ounces recoverable, so it's fairly insignificant, and we therefore haven't included that in our economic evaluation of the project. It's a little sweetener, not terribly important. All necessary infrastructure is nearby. We have grid power. We've got the full engineered proposal for connecting to the grid from NV Energy. It's all costed out and engineered. We have water. We have everything that we need to go ahead and mine. The first deposit, it's in two parts. Three Hills deposit, 71,000 ounces per year for 2 years. No strip, 0.8 to 1 strip ratio. Pretty much the first blast you get into, you're in gold. You just run that down the hill. It's a run-of-mine heap leach, so there's not even any crushing involved. You just take the stuff from the top of the hill, put it down on the pad, put the solution to it, and be happy. Somebody described this as mining for dummies. I'm a mining engineer, so I never get that cocky, but or confident. There is expansion potential here. This is the layout, standard layout. You've got the pit here. You got the waste rock storage area here. You've got your heap leach, got your infrastructure. Very simple. Flat land, you can do all this there. Here's the expansion potential. Our geologists have come up with 4 targets. Here's the pit that we're going to be in. These 4 ellipses, they say geophysics indicates these are interesting areas. There is potential to expand. We are not an exploration company. We're not going to do that. This is more on the exploration potential. This black outline is the pit. This is looking north. And you can see this yellow thing is mineralization dipping down and stretching to the east. And then there's a little bit of mineralization evidenced over here with this first borehole on the list, which has got 40-meter intercept of 1.36 grams. We put that borehole in 2014 as part of the permitting to monitor groundwater, and just happened to bump into some nice gold. I'm going to come to the second pit now. We'll be there for 6 years out of the 8-year life of mine. There's a picture of the hill itself and a cross-section through it, and you can see the colored parts on the cross-section that mineralized, low-grade mineralization in the blue, getting higher grades with the yellow, and some rather veiny higher-grade intercepts with the red. So it's the standard epithermal flowering out, blossoming out of epithermal fluids from a source down at the bottom of the section here. There's the layout, pretty standard layout, open pit, waste rock storage areas, heap leach facility. The yellow east-west line, or north-south line in this case, is the highway, so access is very good. We've got power, we've got water. It's pretty much ready to go, 18 months to build. Potential to expand. The polygon here, you can make it out as rather complex shape. This is our property, and on our property you can see the red ellipses are potential targets for expansion. And then this blue circle here I've put in off our property to the east is the caldera. This is the Donovan caldera, which is arguably the heat source for our property here. The pit is this little green thing here. The green is all the borehole collars, and this is available. So it's not been explored by modern techniques, modern exploration methods, and so there's potential there. Down at the bottom of the pit, further potential. This is a plan view of the pit, and you can see that there are certain high-grade vein-like grades down at the bottom. They're not included in the pit, but they exist, and when the mine goes down to that level, drilling would be done there, and maybe there's potential for a high-grade route to be found. But some of these grades are pretty good. 39 meters of 5 grams, 13 meters of 4, 40 meters of 12, and so on. So recent milestones, we consolidated 100% of the project in 2020. Waterton were our junior partners at 25%. They took the money and left. We now 100% owners of it. I mentioned we acquired the Little Hill of Gold deposit, about 20,000 ounces maybe there, historical resource. We sold the stream to Sprott Royalty. They liked the property enough that they invested in it. We've done an internal study on electric mining equipment, not published, but we believe that would be the way to go for this project. It reduces cost, and it's a pretty good green initiative. We've got the permits for the Hill of Gold. We have taken out Waterton's residual interest in February of this year. We initiated some ESG work, the Arid Land Research Fund with University of Nevada, Reno, which is, again, doing good things for good reasons on our property. And all our outstanding warrants, if anyone's been watching those, expired in August. We are doing a share buyback program for a total of approximately 5% of issued shares. We started that in April. That is ongoing. And looking forward, we continue developing the value proposition. As with all companies, we're always looking at ways of leveraging what we've got. We've got a very solid foundation in this company, which allows us to consider doing various things, which they're all internal. I'm not going to give any details on that, but as any diligent management team, we are always looking at opportunities to increase shareholder value. So, in summary, a powerful value proposition, a tried and proven strategy, buy low, wait, the gold cycle will do the lifting for you. Ross Beatty, there are so many people who have done this before. This is a well-trodden path to wealth. The project is high margin, it's de-risked, it's ready to build, it's valuable. There are virtually none around which are in the same category as this, to our understanding. There's maybe one more in Nevada that we know of, but very rare. It's a current buying opportunity, undervalued at 0.1516 times NPV5. Future value likely to increase with gold price. It's in safe hands. There's going to be no flip-flopping on the strategy, going to, as an investor, buy, and then one day you hear that the chairman or the president or CEO has said, yeah, we're not going to do that anymore. We're going to do this. It's in safe hands with strong leadership, and we are not going to go back to the market for more money by issuing more shares for probably about 5 years. Final statement from my colleague and boss, Peter Palmetto. We are disciplined, patient, and shareholder focused. So that is my presentation. My phone number is here. I would love to talk to anybody who wants to find out more about this project and our company. I'm through with the presentation and ready to take any questions that anybody has. So, Steve, sorry, without naming the people putting in the questions, is your project permitted? Yes, we have federal permits for both pits. We have state permits for the first pit. We could get state permits for the second pit readily. We do not do that at this stage because there's annual fees involved in that, and we don't want to incur that cost. So yes, it is essentially permitted. Second question, at what market cap for WVM does your build model of CapEx 20% of markup kick in? Good question. Our market cap would have to go up significantly for that to happen. if the build is about 50 million US and our market cap today is maybe 40 million, you can see we'd have to go up by a factor of 5 or 6 to get to that point. So we believe that is an implied target. Really, really perceptive question. Thank you for that one. Who are your mining neighbors is another question. We have a number. We have a lithium mine property. Just had a presentation. Don't know if anyone of you took that in just before this presentation. Cypress Resources, just down the road, doing great stuff. Black Rock Silver. They are contiguous with us. Their property boundary butts up against ours. Great news release. I think it was yesterday from Andrew Pollard and Bill Howell, the team there. They're doing great stuff developing that deposit there. We have the next one going west. We have Suma Silver, who are doing drilling there in the same sort of field. We have American Lithium immediately to the north, who are developing a property there. A little bit further north, we have the old Anaconda mine. That's Liberty copper gold pit. It's not in operation at the moment, but it could be. There are many more properties and operations a little bit further out, just down the road of Beatty. Obviously there's been a lot of excitement with Anglo Gold going in there and doing what they're doing. Augusta Gold, Augusta Group are down there at Beatty. And more significantly, immediately to the south of us, Centerra, after coming out of Kyrgyzstan in February of this year, they are our most immediate and biggest neighbors, just 17 miles to the south of us. So that's who our neighbors are. I hope I haven't missed anybody. Another question. Besides looking at electric mining equipment, what other cost-reducing enhancements might you be looking at? Great question. I think we've got it down to where it is going to be. There's not a whole heck of a lot more room to go down here. Thank you for the question. We've had many people look at the project and evaluate it and audit it, if you like. Nobody's come up with a different way of doing it. It is a very simple project, which means that there's really only one way of doing it. There's always ways of reducing costs. We've assumed contractor mining. If we were doing it, we're a small company. It's a safety move to use a contractor rather than your own equipment and your own forces. If another company acquired this property and they had the in-house ability and experience to do it themselves, they would shave off a significant amount of their operating cost. We wouldn't do that because it's all about risk management. So that's really, other than going electric to reduce diesel, which is going to progressively get more and more expensive over time, the electric, there's a few little things that could be done, but essentially it is what it is at this point. Thanks for that question. I'm not seeing any more questions here. Bob, I don't know if you're on the line still or listening in, but I think I'm essentially at the finish point. So I want to thank everybody for the questions and participation. And again, please go to our website. My number's there. We need to talk to all the serious investors rather than speculators that we can manage to get in touch with.